Good old fashioned Dow US 30 USD on Rwanda, but DJI, djia, I think. A whole bunch of tickers, Dow Jones, Industrial, Top 30. And yeah, this one and NASDAQ were some of the last man standing. And the price action today hit hard, did a lot of damage. And these candles, these red candles we're being seeing, like, okay, check it out. This one, check out right here. This is the difference, the differential price move, and this is a percentage. So this one was minus almost 1450, 5%, 5.48. This for the whole month, man, 8.80%. We're not done yet. 8.8, 2,259. 8.8, 2,500. And I decided to go, let's go zoom in on 2008. 5%, 678. So can't be, amount-wise, we're really, really high above. 2,400 move back in these days would have been huge percentage-wise. So let's stick with percentage. 5%, 9. See this one here on the breakdown. So I'm just wondering if there's a certain percentage of price move where it declicks or clicks, or the fear and the panic when a certain percentage move, that threshold of noticeability where mainstream media say, okay, man, oh, something's happening. So daily, I know there's a lot of fluctuations, small candles. So I take a step back, look on the monthly, reduce noise. And right here, that breakdown candle below the 12-month moving average had a few months already below the 12-month moving average, skewing it downwards. And this one's clear horizontal breakdown line. So you had a 9.76% break for 1,230 points. Sideways move for a few months. And then after that, what are the bigger candles we had? 6.58% down, 13.87% down, 5, 1, 8, and 11. So getting those double digits in monthly candles in a stage 4 accelerated decline is very possible. Had it once, twice, so 11, 13. And after that, you had high singles, 9, 8, 6.5. So that's, and I don't know, in June, you see in June when it broke down, nobody was saying, I don't think there was mainstream here at this stage. Nobody was crying panic. Nobody was going crazy, even if you had a 9% and almost 10% drop in 1 month. We'd have to get out those news clippings, but I don't think it was full panic yet. Even if the 12 months average was really going downwards, if you're on the monthly candle, you're having lower lows, and here you're not able to go back up, lower highs, sorry, and then after that, broke down and accelerated the following month. So how is that comparable to today? We seem to be at the first stage for the Dow. That's the high. December's not closed yet, 8.8. How much do I have here? 9.76. December's not closed yet. I'll try to get both on the same. There you go. So this could be the embryonic breakdown, and we might have a few more months before mainstream, I love saying mainstream, starts picking up. So maybe a little sideways move right here. Where's my support? Oh. My support seems to be way further down. I think my support's here. Previous wall, previous resistance turned support. I think back in 2008 we had that. If I extend this line here, here you had a 4-month consolidation sideways move, and that serves as a stage 2 continuation breakout. Previous resistance now turned support. It seemed to bounce off here or stagnate for a few months and then continue to slide down. So I think now we have a bigger vacuum and we could actually go down. I don't know, man. That's insane. Let's see what's my measured move. Paste arrow. Here's my applied measure move. If we close below that, if in December we close below that level right here, that 2490, yeah, getting us close to that target. So it's envisionable that we might go down here. So that'd be a crazy candle, or maybe the next month. And then a bounce back up and then go down. 12-month average going downwards. That would be our higher low. First one here, second one here, back to, see here, it did the same thing. Just went a little higher. Top pattern, support and resistance, bounce back up, bounce off the 12-month average. Same thing here, down, bounce off that support and resistance, 12-month average. So if we don't get it in the next 2 weeks, close December, get close to here, that'd be a crazy candle. Already 8%. I think we go all down here. It's way more than 8. So I'm wondering how big a candle you need to be for it to accelerate, but I don't think it's just a percentage-wise. Technically, you need a breakdown below support. And after, technically, I think you're broken down, then you get the vacuum candles, which have high, like 13% here. High movement, open to close. Percentage-wise, then they happen after you close below monthly defined breakdown levels, where technically there's the buyers aren't there anymore. There's a selling pressure. Fear starts being spread. Panic ensues. Then after that, it's free fall. But you still got, when I see pullbacks, strong pullbacks here, close to 12-month average, for me, there's not enough fear yet. When you go sideways move and market's undecided, that's not fear. This is fear. Just like greed, when the price action goes far away from the 12-month average going upwards, that's greed. Oh, man, to the moon. Well, when you start, these are fear candles. Starting to get away from the 12-month average. And fear doesn't always last forever. So you got to respect stage analysis. But these are the fear candles. And I'm not quite sure we're there yet. If we get a bounce back here, that means fear is not settled in yet. That means the bigger candles, the bigger moves are still on their way. And you'll have a possibility to enter short once you get a bounce back up and the price action starts going back down, making lower highs. Good risk reward entry because you have that 12-month average protecting you. You have that horizontal breakdown line now acting as resistance. So this is a great area here. And let's see what happens from here, guys. Even here, see if we compare 2008, even we could have a sideways move here and have another entry here before the next leg down. And that bigger pattern, bigger targets until until fear and panic reach a climax, until supply evaporates and buyers come in. Sellers evaporate, buyers come in, and after that, the 12-month average starts going flat. And then you close above, and then you are out of there, guys. So Wall Street, Dow Jones, you were the last one that was really holding strong. If I had to have a choice between shorting you and shorting the Russell, I definitely short the Russell, because the Russell will most likely always underperform you. Check it out. Let's go on the weekly. Let's pop in RUT Russell. You see, if you see red here, that means you're underperforming the Russell. It doesn't happen often. Oh, you underperformed the Russell just a little bit, but not a lot here in 2015. And look at that. So the Dow, even in downtrends, oh, here you underperformed the Russell. Ooh la la. For a brief section, but after that, as you continue downwards, you were actually outperforming the Russell. The Russell went down faster than you did. Right here. So most of the time, you're always overperforming the Russell. But you're starting to... Nice top formation right here, guys. Look at that. Out of the Ichimoku cloud, defined support. Below... Let's zoom in. Oh. Alright, just like that. Whoa, Pat. Below monthly defined support. Below weekly defined support. Yep. So we have to see if Friday closed below that. Below the Ichimoku cloud. Crescendo. Big red volume candles right here on those down days. Not good sign, guys. Not good sign. So the Dow, man. Stage 4. You were in stage 3, but now you're entering stage 4 territory. Weekly close going to confirm it on the weekly. Monthly close going to confirm it on the monthly. Price action could always suck back in the next week before the end of the month. But it's just a question of time, I believe, because if you compare to all the other indices out there, they're all failing. They're all confirmed breakdowns ahead of time, leading indicators. So the Dow, it's just a question of time before it joins up. And here's pretty much a roadmap that you'll be able to play. Hopefully there's no fear and you get pullbacks. And when there's fear and panic, then you might not get those pullbacks to enter and I'll just shoot down. And that's all that you wrote, guys. All right. See ya. Ciao, Dow.